I don't know about this lip color, but what color is this? This is called Glimmer. It's called Wild Rose. Let me go ahead and do a mid check-in on my account that has a cost basis of around $5,300. Today is the 18th of March, all right? Let me just make sure. Yes, today is the 18th of March. And the value of the account is around $4,300. I believe that the decreases in ING, Citigroup, and the Fidelity Select Brokerage and Investment Management portfolio could possibly be related to the recent Silicon Valley Bank situation. Perhaps that has something to do with it. They're down, so that's going on. I don't really see a significant difference in BlackRock. It is down, but I don't see a significant difference in BlackRock. I think I'm going to go ahead and just go to the individual positions, the balances actually. What I'm going to do is I'm going to go over the equity scores, the Star Mine scores, and right now Sherwin-Williams is currently at 0.5, which is very, very bearish. We have Nvidia that's also very bearish at 0.9. I like when stocks are very bearish. For me, I consider those buying opportunities. I'm not a financial advisor. So LPL, which is LG Display, is also very bearish. That's a company that has a working relationship with Apple, last I researched it. And 3M, which is a recent purchase, is currently 7.0. It's at neutral. So maybe you buy it, maybe you don't. It just means it's kind of middle of the road. Coca-Cola FEMSA is bullish at 7.7. So I buy a little bit of it just for research purposes. It's not like I'm going to be buying a huge amount. ING Group is also neutral at 6.5. So I just like the ING Group because it's a holding company and it's based in Europe, in the Netherlands. Amsterdam, I believe. Don't quote me. And some of the other companies I have Citigroup, which is neutral. BlackRock is neutral, and Apple is neutral. So, you know, you just can't go wrong with Apple. You just can't. I haven't heard anybody say, gee, I have too much Apple. That's just really my opinion. And then BlackRock, anytime it goes down in price, I just look at things like BlackRock because they have so much of the market share of money in the world, at least a quarter. If that goes like bearish, I'm just thinking like, if I have any kind of money, let me get some of that. And BlackRock owns a company, it's called the State Group or something like that. And it's considered one of the banks that is too big to fail. Just go look back at my video about BlackRock and you'll get the proper name, unless I put it in the on the side or something. But it's one of the banks that's considered too big to fail. So I just think, well, if it's too big to fail, it's going to get bailed out if something happens. And somebody will say, wow, that's a terrible way to think. But when you're thinking about, money potential, that's how I think of it. And then Citigroup, Citigroup is neutral, but you think of just like transactions, and it is relatively inexpensive compared to a lot of other similar companies. So it's just something to look at if it were to go bearish. With NVIDIA, this is something very interesting with NVIDIA that happened recently. It's interesting to me. I was looking at a piece of technology I purchased a while back, a desktop, all right, and was it a desktop or anyway, it was a piece of technology, and I noticed on the technology it said NVIDIA GeoForce, and I remember that I did a video about NVIDIA. So this is the first time that I've actually seen a device that had the word NVIDIA on it, and it was something that I purchased from someone that, you know, is in that type of business. Okay, so I found that very interesting. I'm like, wow, I actually have a piece of technology that has NVIDIA on it. So with Sherwin-Williams, with Sherwin-Williams being so bearish, I mean, it's at 0.5. I have talked about how discreet this business is. Just go into your whatever map you use, whether it's Google or whatever map you use to get around and navigate, and you type in Sherwin-Williams and just look and see where they are. Wherever they are, I just find it's around expensive real estate. So because I do so much traveling on my job, I see this all the time and I take note of it, and the locations are generally discreet. I was out in an area surrounding Atlanta and it was very hidden away, but when I look at it, the Sherwin-Williams is not far from parts of, like, it's near, like, not far from Emory. It's not far from up and coming parts of the surrounding Atlanta area. And actually one weekend I was passing through doing some shopping and I hadn't noticed this Sherwin-Williams, but it is just like hidden and tucked away. And I actually kind of took some B-roll of it because it is so discreet. And every time you find one, I mean, there's one in the neighborhood I live in, and it is so discreet, but there's so much real estate surrounding in the area. It's just very interesting, so you might want to pay attention to that. I was looking at some videos about finance, and this one person said that, you know, their tax advisor said for them to put some money into a Roth. And, you know, it was kind of like, you know, good luck with what I'm making. Good luck with what money I'm making. So that's why I do videos about investing on a small budget. So what I would suggest you do, if you just say, I really don't have a lot of money for whatever reason. If you're working a traditional W-2 job and there's a company match, at least, and you're eligible, at least withhold the amount. So for example, if they say they'll match up to 5%, well, you withhold 5% of your income because that's like 10%. And there are places that are like that. Not a lot of them, but there are some. Or if they match at 3%, up to 3%, you withhold up to 3%. At least do that if you don't do anything else. And when you're able to, let's just say you get a pay raise, well, it's going to automatically go up if you get a pay raise. Don't set it at a dollar amount, just set it at that percentage and it'll steadily go up. The other thing that you could do is you can set up an account with a low-cost brokerage fund, low-cost fund, and set up a brokerage account where you're able to also have built in it a IRA, so you can find out what you're eligible for, whether it's a Roth IRA or a traditional IRA, or if you're an entrepreneur, maybe some type of SEP IRA. There's other ones too, but find what you're eligible to get and try and max it out. Now, there's times where you might not be able to max it out, but at least do something. All right, start off with that. All right, everyone. I just finished talking to a relative on the phone, and I don't remember what I was talking about. I think it was investment on a small budget. So just start with whatever you can and take it from there, and don't get discouraged, and don't compare yourself to anyone else, because it's this quote that says comparison is a thief of joy. Not everyone is born with a silver spoon, so you just do what you can. And I was at this retirement planning thing, and this person was talking about if you put away 10%, 15%, 20%, 25%. Not everyone is able to do that, and you just have to start off with where you can. You can get a brokerage account, like for example from, I'm not endorsing any of these, whether it's Fidelity, Charles Schwab, Vanguard. Vanguard tends to be good for people that have higher balances. Now, that's just my opinion. I can't speak for Charles Schwab, but I do know that Fidelity does have fractional investing options. It's possible Charles Schwab may have fractional, but I haven't really necessarily researched that. You do hear me talking quite a bit about Fidelity. I've used some of the other companies I've mentioned in the past, but I would say that Vanguard, if you have a large amount, like if you're doing like a direct IRA rollover and you have a lot of money, and when I say a lot of money, I would say like $500,000 or more, okay? I did have a coworker like that, and I'm kind of like, why are you calling me? And they're like, well, I trust you. So Vanguard will handhold you a lot more than Fidelity. I mean, Fidelity is good too, but Vanguard will really handhold you. But one thing about Vanguard, a lot of their mutual funds, they have a higher minimum investment. You have to check, but with Fidelity, a lot of their companies have a zero minimum. So if you have a small amount, you want to pick a company that has fractional investing.